webinar.
Good. Good morning, everybody. My name's Keith Warren, and on behalf of the FEA team, welcome to the latest webinar in our series, which is Exploring Leasing as an Option. We've got four industry experts with us today. We've got Richard Lawson and Matthew Sterney from Academy Leasing, Sharon Price from Shire Leasing, and Ian Gage from Johnson Reed. And our thanks to Jocelyn for putting this webinar together. And the webinar this morning is being recorded, so please note that. And if you have any questions as we go through, please either ask that in the chat, or if there's time, we may have an interactive Q&A at the end. I'm just picking up a bit of feedback somewhere, so if I could perhaps just ask you to mute your microphones for the moment. One of the reasons behind this webinar coming together was as a result of the FEA member survey that we did a little bit earlier in the year after the COVID crisis had come in, which was highlighted the facts that there's going to be and is significant disruption in the market for manufacturers, for distributors and operators. Obviously, as the market tightens, there is less cash around, the need for more adaptability and flexibility. It highlighted the fact there was going to be more second-hand equipment on the market. And what we wanted to do is see where we could work with our business supporters to help get the message across in terms of the role of leasing and how that may help the operator to adapt to the market changes, because they may need different styles of operation in order to adapt to the new climate, different equipment in the kitchens, and certainly in terms of ensuring their viability through more efficient use of labour, perhaps reduction in energy use. Investing in new equipment can be a means to achieving that. And we shouldn't leave behind the fact that certainly in terms of the energy efficiency agenda for the UK, with us being really only 3 kitchens away from net zero 2050, if you take the average life of a kitchen being 10 years, the opportunity to invest in more energy efficient equipment is right at the fore. And I have to say, as part of the FEA's 4-point plan for net zero carbon, we've highlighted the fact that operators should be encouraged to invest in new, more energy efficient equipment, and that there should be either tax breaks or an incentive scheme at the point of purchase to enable that. And also the role that the dealer distributor has as part of holding that supply chain together is all important. So with that as a backdrop, it's my pleasure to invite each of our speakers to run through in about 10 minutes an overview of the service they are providing and also their observations on the market. And as I say, what we'll do is have a panel discussion at the end, so please keep your questions coming in through the chat and we'd be pleased to put those to our speakers. But I'm going to start off with Richard Lawson from Academy Leasing. So Richard, if I can ask you to start your presentation. Thank you.
No problem. Sorry, the bar's in the way. So yeah, firstly, just thank you to everyone for attending. And thanks to the FEA for putting it together. I've kept this as short as possible. As I'm aware, there's going to be a lot of repetition between each of us. So we're just going to start discussing who Academy Leasing are, benefits of a lease for a customer, the various different financial products on offer, and the impact of COVID, and how we at Academy are working to look after suppliers and customers. So Academy have been established as both a broker and a lender for over 30 years. Being both a broker and a lender, it means we have access to a vast panel of funders alongside our own book. And for the catering equipment sector in particular, we write around the 10 million mark each year. And that's made up of our own funds and some of the areas we work with as well. We're part of an AIM listed PLC called 1PM, and we employ over 200 people across 7 different sites. Through that group, we offer a wide range of financial products. We've got invoice finance in there, soft hard asset finance, commercial wealth, a bit of a mixed bag. Academy, our main focus is on the soft asset side of things, and in particular supply-led vendor finance. So we really like to pride ourselves, speed of service, flexibility of our underwrite, and just getting deals done and making sure suppliers and customers are well looked after. So just going to move on to the benefits of leasing for customers. Leasing can just be a very attractive option for businesses. Simply put, it allows them to spread the cost of the goods over a period of 1 to 5 years, preserves the cash flow, which obviously at the moment is very prevalent. There's also some significant tax benefits for businesses who lease equipment. With the finance lease, the lessee is permitted to claim the payment of the leased equipment as part of the business expense, and that ultimately then lowers the company's taxable income. And finally, for this slide, I just want to note that we have really flexible end of lease terms as well. So through third parties, we're still able to agree transfer of ownership to the client at the end of a lease. There's also other options as well we can work with in getting title back to introducing a supplier as well. So we can really work around your business model and how you want to push leasing. So quickly moving on just to the different types of agreements that we offer. So we have firstly is the lease option. Now, this is by far the most popular product that we've got on offer, particularly in the catering and hospitality sector. We do around 90% of the deals that we process are actually on a finance lease. Lease agreement keeps the initial payment low, allows them to spread the VAT along the course of the agreement rather than paying it all up in advance. And they still have that option for transfer of ownership at the end of the lease once it's terminated. The second product you'll see there is a hire purchase. So HP, that's true ownership of the asset to the client, and that's set out in the agreement with a final option to purchase at the end. The downside for some businesses is that all the VAT on the equipment is required to be paid in advance, and in some instances, a lender may ask for an additional 10% on top of that as well. So it can still mean the client has a significant outlay at the start of the agreement, and again, can make it less appealing for some SMEs and smaller businesses. And finally, you'll see we have the operating lease. So this is a true rental. And whilst it does keep the advance rentals down, it allows the spread of the agreement, some tax benefits to it. There's no option at all for the client to own the equipment at the end. With catering equipment, we tend to only really use the operating lease for LEA schools, local educational authority schools, and that's simply because they just can't sign a finance agreement, a HP or a finance lease. Yeah, and then finally, I just wanted to touch on the impact of COVID in our sector and how Academy have just tried to assist suppliers and customers during the pandemic. So as some of you may be aware, placing deals with funders has become quite a challenge over the last 6 to 7 months. Catering hospitality sector in particular, some lenders become much stricter on the underwrite. In some cases, they've actually even pulled out of lending to the market completely. Luckily, our own book has allowed us to continue to support suppliers through at the time, and our message is that we're just well and truly open for your business. We've actually launched a new product as well that we're offering out to all suppliers who refer to us. You'll see some examples there on the bottom of the screen. The first one is the 3-month low start product. This keeps the initial rental really low for the first 3 months with higher payments at the end of the term. And then the second option is the 6 months half payment. It's obviously gives customers a lot more breathing room. So for some businesses, it's going to be really great option for them to use, and hopefully as well for you when you're out trying to sell a deal on the finance, it gives you a bit more, something a bit more quirky and flexible for the client. So to keep it short, that's all from me. But there's our contact details. Should you need any queries, questions, please by all means take them down, and we'll be happy to assist you. Thank you.
Thank you, Richard. Excellent, and thank you for that concise summary of the support you're providing there. Sharon from Shire Leasing, Sharon Price, is going to give a run through of their offering. If I can hand over to you for your 10 minutes, please, Sharon.
Yeah. Okay. Hello, everybody. My name is Sharon Price. I'm the Sales Director at Shire Leasing. Just to give you a quick overview of Shire Leasing, we've also been going 30 years. In fact, we were 30 years March this year. We had lots of celebrations that we wanted to achieve, and sadly, COVID put paid to that. We have, as you can see, I won't say everything on the screen, but 150 plus employees. We've got 66,000 live customers. We've got our own book receivables at £120 million. we are also a funder in our own right and a broker. We tend to do a lot in this current climate on own book because a lot of the funders aren't actually accepting business. One of the largest funders we've got, and one of the ones we use the most, is the British Business Bank, which is government run, and we were one of the first who got taken on board that programme, so we were very proud of that. As you can see, most of our businesses...
Sharon, I'm very sorry to interrupt. I can't see your slides. I don't know if anybody else can.
No, we can't, Sharon. If you click at the bottom to share your screen, try that again.
Yeah, I'll try. Sorry about that.
Okay.
No worries.
Oh, it's all right. I'm now clicking it, and it's just carried me on to the... I cannot... The button is not there.
Not there. Right.
Okay.
Let me... Do you want to carry on with the next one, and I'll go and get my IT to help me?
Sure.
Well, you are a co-host, Sharon, so you should be able to share your slides. Let's see. Are you able to now?
No, there's nothing at the bottom of my screen, I'm afraid.
Okay.
Okay. Sharon,
Try again.
do you? Yeah, give it one last go. And if it won't show, if Ian's ready in the wings to come on, we'll just do a slight change in order. But give it one more go and let's see if it'll go, Sharon.
Yeah. No.
No. Okay. All right. So, Sharon, if we ask you to see whether you can get that fixed, and in the meantime, I'll hand across to Ian Gage from Johnson Reed Business Finance. Ian, if I could ask you if you could share your screen, and we'd be pleased to hear your presentation, please.
Yep, so I'm just preparing. Firstly, I'd like to say good morning to everybody. Welcome and thank you, Jocelyn, for arranging the event. I think we've all been looking forward to it, in as much as just sharing and having a conversation about our experiences. You know, what we've been going through, the challenges that I've been talking to many distributors, suppliers, manufacturers, and it's obviously, I wouldn't suggest worrying times, but concerning times for all. And at Johnson Reed, I suppose I've worked through the pandemic in thinking, you know, how can I help? How can I communicate? How can I sort of support the sector, and perhaps in a different way than we've focused on historically and in the past. And I think this was a fabulous opportunity to perhaps share what our thoughts are and what our understanding of who we are, what we do. So I will cover a little bit about Johnson Reed. Thank you, Richard. It was a really detailed introduction and knowledge about the product range, and I think that's really valuable to everybody to refresh and understand, you know, what we do as a job. But equally, maybe if I can focus a little bit on how I thought we could support more in trying to give value back to the sector where, you know, perhaps they're valuable and need it. I too am not the best in sort of IT. So what I'd hope to do is share what I have with you and then sort of talk you through and really make it all work for you guys. Wait 1 second.
Looks good, Ian. Looks good.
Oh, there we go. So you can see at your end, but I can't see at my end. And I'm thinking I have the same trouble as Sharon. So this is a little bit about sort of what we've been experiencing. So much of my time, all of my time has been sort of talking to businesses, educating them through C-bills. How can we get them through in the financial issues that business have? But that's equally sort of manufacturers and suppliers as well. Everyone has the same concerns. So if you take time to sort of talk through, and I'll just highlight the areas. What can we do? We can create marketing material for people. We can allow them to tell the message of leasing to their clients, their distributors, their partners, whoever it is who has that client-facing role, that selling role, of how we can make things a little bit easier for you. It's about sales processes. How can we sort of help and assist towards the smooth process of allowing you to complete on sales. A very, very short presentation again. It's been whizzing through. I should have slowed it down a little bit. And this is a little bit of how and why you should offer finance to your customers. Raving fans, that's basically who we are, what we do, and what we're encouraging through education of how we can help you sell more often. This is flirting. Are you having trouble, guys? I apologise. My screen is going backwards and forwards.
It looks as if a video is playing, Ian.
Yeah, it is, but it doesn't seem to be smooth running and playing. I do apologise. The beginning is just talking about the types of business that we help and support, and that's new starters, established businesses, whoever. You know, so the message out there is that finance is probably something that your clients are going to consider more because they need to preserve cash flow, improve cash flow, look at other alternatives than paying cash, regardless of the size of the business. So, you know, it's education, and if we can assist and help on that journey, talk through the benefits and features, I think that's the process that I would, or the role that I would like to want to help with in educating you, so you can support your sales staff with a smoother process, which is not what I just presented in the video that I've made for you. I do apologise. Again, what we've been highlighting and thinking would benefit many of our customers is a marketing package that we would help promote leasing as an option to your distribution channel, whether or not it's through direct to customer, whether or not it's through your supplier relationships. So we're working with a lot of website material that we can support you with, marketing material, flyers that you can promote leasing options, and just highlighting how, where, what and how that we can add value to your business. Bear for 1 second, we'll close that down. And yeah, sorry, that was a very, very poor presentation. I do apologise, but yeah, we're here to help and guide, and very much on the lines of the products that Richard highlighted for us all. So I'll end it there and apologise. It wasn't as smooth as I'd like to have done. I'll follow it up shortly.
That's okay. Thank you for that, Ian. That was fine to follow, and no problems there. Sharon, are you back on stream, do you feel? You're on mute, I think, Sharon. If Sharon, I think you're on mute.
Is that better?
That's perfect. We've got you. Okay.
Lovely.
Just while Sharon's loading that, please post any questions in the chat room. Just while Sharon's slides are coming on, I guess one of the questions I'd be interested in knowing, roughly what percentage of the market do we think is through a leased option, would be a question perhaps Ian, Richard and Matthew, you could think about it at the end, and perhaps what some of the common challenges are to getting a greater penetration for leasing in the market. Sharon, that's fine. That's up, and we're there.
Yeah, I'm just
so
going back to the
back
beginning.
to you.
Sorry about that. You all heard me. So if I go to the slide when I was talking about 30 years in business, and as I say, we had many events planned, and we had to cage them all, as a lot of you did. But just to give you highlights there, 150 plus employees, 66,000 live customers, 120 million own book receivables, and 30 funding partners. And as I said before, one of them includes the British Business Bank, which we're very proud to say we were one of the first who they engaged with. We're very much an SME funder with, as you can see, 2,000 proposals, 84% credit approval. £11,000 is our average transaction. We do larger, but that's our average. And we've got 9 million plus we've funded SMEs since lockdown. So we are, as everybody else has said, very much open for business. these are all our products, very similar to everybody else's, I think. Finance lease, which we include operating leases there. HP, we refinance equipment. We do literally just do loans, and of course we're doing Sybil's loans as well. As Academy do, we do low start, 3 and 6 months. What we also do, which I think is very much in line with a lot of the businesses out there, is we do a seasonal lease. So we can, when they're busy in the summer, we can heighten the payments, and when they're quiet, we can lower them, and we can do that over the term of the lease. So it's very much whatever the customer wants. We'll do sale and lease back, which is very prominent at this time of the year when COVID has hit, so we can give money back on equipment. And we also do technology leases, which is literally license only, if people are interested in that. We've got our own online portal, so it means that you can put your proposals straight onto our portal, and we've now switched on our auto accept again. We had switched it off when the crisis first hit, but we've switched it on again now, and we can get you an acceptance within 6 seconds. If it's not auto accepted, our decision is within 4 hours. And I've put what we're currently doing, because I know a lot of funders are struggling, but currently our average time now is 1 hour 38 minutes, which we're very proud of even in this current crisis. We e-sign a lot of our customers, which is very, very useful for customers. We haven't got to worry about post. It's an easy job for the customers, and 60% now of all our business is signed on e-sign. And we pay out the same day. I know again a lot of funders haven't been, but we've kept our payments the same day, and now we're actually less than an hour we pay out from when we've got all the approved paperwork. We always give people a dedicated account manager, so you won't be just talking to 3 or 4 or 5 or 6 people. It's a dedicated account manager, and we have a dedicated operations manager that works with you as well. I've put the fact that we've got the outstanding operations team, because it's not just about salesman and your account manager. It's all about having a great back office. And as you can see, we won the outstanding operations team in 2009. So we were very proud of that. And whether you want finance options, we can do anything for you. We've got part of a Shire group, so we can also offer marketing, IT help, because there are 7 partners within the Shire group. And that's me. Thank you very much. Sorry for the false start earlier.
No problem at all, Sharon. That was worth waiting for, so thank you very much for that. Just to get things going, what are your estimates in the amount of the market that is through a finance option as against an outright purchase?
I think we're getting more and more inquiries, because obviously cash is king more than it's ever been before. From a point of view of where we budgeted and where we're at, we're at 65% now. It fell off the cliff right at the beginning, but we're back to 65%. And from last month, it's starting to grow now. So I can see us being back to full capacity with everybody back on board, probably by January, February.
Matthew and Richard, your view of sort of the value of the market that is financed, or perhaps a percentage?
Matt?
I wouldn't be able to give you an exact percentage, because I'd be, I did, but one of the things that we've certainly noticed is there's been a significant change in the type of customer that's looking at finance. And people that would have normally looked just to pay cash are certainly much more interested in finance. As I said, cash is king. Everybody is far more aware of that now than they were before COVID. And they know now they've got to keep some money in their back pocket for that rainy day. So there's a lot more different people than we were seeing before looking for finance options, and that certainly kept business very busy for us. And we are performing very well. similar sort of figures to Sharon. I think we're just over 70% of what we were budgeting for the year, and getting busier every week.
And I think just as an observation on that, it shows there's a bigger proportion of leasing, because typically across the FEA membership of those companies that I've been talking to over the last sort of 2 or 3 weeks or so, companies are trading at anywhere between 1/3 and 2/3 of their pre-COVID turnover.
Yeah.
So that seems to be about where the mark is. So looking that you're up at about that 2/3 of the market is probably showing that there's more leasing going on than outright purchase.
Yeah,
Ian,
absolutely.
what are your observations on the market? How it's
I think
performing?
we're very similar, and I think what we're noticing is that we're getting more engagement with suppliers that maybe historically believe that their client doesn't typically choose leasing as an option. They've got capex, they've got funds to make outright purchase, but now definitely they are considering the alternative of the funding, and primarily to do with COVID, just because it's perhaps more prudent and sensible for those businesses, even if they're well cash funded, to spread the cost of the equipment. And it's been really engaging. We've worked hard over the years, and perhaps people haven't engaged where maybe there's not been a requirement to, but now there is. And so certainly suppliers, is it customer led, is it supplier led? I genuinely think it's a bit of both. And I think all of us, if we can engage and educate that we're here to help and support, we're not selling, we are very, very supportive, and the market is going to increase after any recession, any period of financial difficulty. Borrowing becomes prevalent and more inquired about. Can we secure it in every instance? Not necessarily. We're working hard in the background, as I'm sure all the guys are, whether it's in-house, whether or not it's supplier-led, but it's going to become a very, very increased marketplace. It's definitely the percentage high.
And a question for all of you, if I may, given the tightness in the operator market because of what's happened, do you see that as having an effect on the rates that you'll be charging, or indeed the terms? Does it have an effect there in terms of the future?
I don't think it does necessarily. Pricing models are always up for review. They're up for review for various different reasons, and I don't think any to go direct specifically because of COVID. Although the default through COVID obviously is inevitable, so funders are sort of having difficulty, but pricing, the majority has remained consistent pre-COVID levels, and I would be annoyed if they chose the opportunity to raise rates. I expect not significantly.
I can be honest and say we've had to put up our rates on the very high risk sectors because of the high risk. However, it's a small increase and we're still giving them finance. It's just that we have had to increase it slightly.
What I just ask again, given that we've got not too many on the call, and to save the need to type in through the chat function, any of our audience and members who are on the call, if you'd just like to open up your video and unmute yourselves, be pleased to have you ask a question directly of our guest speakers on today. Who'd like to lead first with that? There must be a burning question out there somewhere.
You never told me how to game. When did you find out that email today?
Obviously, you've all answered all their questions.
I think Alan's unmuted. Alan Davis.
Yeah.
Question.
Yeah.
Good. Thanks, Alan.
He muted himself again.
Can you hear me now?
Yes.
Yes.
Good morning, everybody. And thanks for turning up today and giving us some information on leasing. We, a couple of years ago, launched our first electrical item, which is, for us, a pretty unique area of equipment. It's we make it. It's from Mitchell & Cooper, and the unit itself is valued at around £4,500. Now, I noticed, I think it was Sharon who said your average lease was on equipment of about £10,000.
Yeah.
Sorry.
We start at £600.
Okay. And so, and the same question probably to the other people. Would you still have a product available for something of that value?
Yeah, absolutely. We're brokers, so we hold the market, so a range across £3,000 if need be. So yes.
Okay, good. Okay, thanks. I'll be in touch at some point. Thank you.
And a question from me: Does the rate change based on the value of the equipment being leased or put on a finance or purchase option?
It can marginally, yes. Yeah. If we're going out to a panel, if we on one funder particularly, they'll tier up from 2,000 to 5,000 to 10,000, and the greater the leasing value, the margin does come down ever so slightly. Yes. Not significantly, because we're talking smaller numbers, so it's not as noticeable on 3,000, 4,000, 5,000 as it might be, but an increase of funds on 100,000. But yes, marginally.
Yes, same. That's quite common throughout the industry. The more you borrow, the cheaper it becomes.
With the financial products though, Keith, a finance lease and a HP, the rates are usually relatively the same. It's just with an ops lease, there's usually a 2% uplift on rate or around that mark as well. But for a finance lease and a higher purchase agreement, rates 9 times out of 10 exactly the same.
And in terms of, I mean, we've got majority of manufacturers and suppliers on the call this morning. Are there any sort of ancillary or secondary costs in relation to setting up an agreement with a manufacturer as far as leasing is concerned? And I guess also, is there an opportunity for some form of a sign-up fee or profit share between manufacturers and yourselves as the finance providers?
Let me take that.
Richard, you want to go?
I'll take that one. We've recently taken on a manufacturer, not for the catering equipment, but a manufacturer who obviously sits at the top, and then below him he's got distributors, and below him there's installers, or whatever you want to call them, and we can do various things. We've got a profit share for the manufacturer at the top, not necessarily for the distributor, although we can. And then the system installer, we can do that individually on any kind of basis, and we'll discuss that when we discuss the entire program.
Yeah, similarly, we've worked with manufacturer, and again, I suppose it's different if the manufacturer sells direct also, or whether or not he's solely through distributor, just becomes a little bit more complex. Ultimately, as we support many distributors, whether it's NC or whether it's Cedarbond, and we will sort of have a commission agreement, an enhancement, which we pay to the distributor as opposed to the manufacturer. So we can create the scheme, the knowledge scheme of leasing available for that specific product range. But ordinarily, a distributor would be sort of, I suppose, in receipt of any share and any commission that is generated through the sale. But equally, some manufacturers may choose to have a direct model. Maybe they're just national accounts as well, and similarly, a scheme can be set up specifically, whereby there can be a remuneration for working with us.
And another supplementary then, is there an opportunity also to roll into the equipment costs a planned preventative maintenance program for the equipment as well, so it's a complete package of support for the product, or does that sit outside for the most part?
They can be included.
Oh, sorry, Matthew.
Sorry, carry on.
We can do a maintenance. It's not paid up front, but we can collect it on behalf of the supplier, distributor, installer on a monthly basis, and then we pay it back to them once we've collected it on a DDM. So we have a cost for the equipment and a maintenance cost, and then there's no charge to the installer, supplier, distributor. We pay it back every month, every quarter, whenever they want it.
Thank you. Any questions from our audience on the line?
Yeah, just following on from that one on the maintenance. What about installation? Can that be bundled?
Yes.
Yeah,
it can.
Yeah. Thank you.
And question for me, is 3 years a typical term, or
I think for catering equipment, yeah, I think it's typically not to exceed beyond its expected life cycle. So a rational oven perhaps maybe would be over a longer term, but if it's a stick blender, you maybe choose not to want to go beyond. So 3 years is a good sort of tax efficient return as well, but ultimately.
And what do you see? What do you see as the barriers to entry? I know for some business sectors, the finance and the leasing option can appear to be a dark art, and there can be some confusion for those that aren't as financially astute or aware. And for many food service operators, their first role in the morning is to make sure that the supplies have turned up, the staff have turned up, and they've got an order book of customers wanting to come and eat the meals. So their knowledge and expertise of finance, can be challenging. What are the barriers, and what do you think as an industry we can do more of to help get an understanding of finance and its role in supporting the operator?
I think the predominant benefit to finance is quite clearly the cash flow saving and the affordability. And a lot of getting a customer to understand that is about presentation. It's not just necessarily breaking that cost down and saying, well, it can be this much per month, but it's making it relative to the client that you're dealing with. And a rational oven is probably a pretty good example, because you can literally break it down to how many covers per week or per day that's actually going to cost them to have. And of course, it's very easy for them to see how much more efficient that's going to make their kitchen and their ability to turn covers around within their establishment. If they can then do an extra 50 covers a week, but it's only costing them an extra 5 covers, they're just going to be making money from buying the asset itself. And that's quite an easy way to get that cost justification over to people.
I think Matthew's right, and I think it's sometimes beyond the numbers. It's not just about the numbers, it's understanding a lot of the benefits and features. But I think in these difficult times, it's planning for the future as well. It's just a very, very good way of raising capital or not using your capital where something can be financed. When Seadoors has gone, when all of the government-supported loan schemes have ended in November, money's going to be hard to come by, and it's that education process. So we can talk to the end user, we can really educate them and talk with them, on a whole picture, as opposed to, I think any guy sort of in the room, any business that's spoken today is just here to sell it finance leasing. It's to educate, it's to support, and create that ongoing lifetime sort of relationship with that business owner, and anyone can do education and literally help and support. And Keith, if we can, all of us combined, if we can do that and create a better understanding for the distributor, the manufacturer, to sort of, I suppose, get it first, so that they can work with us in helping that operator, because it's challenging times for them. And if they pay, £5,000 now plus that, when they could spread the costs over 36 months, retrospectively we can finance it, but ordinarily that doesn't happen. If we can help them, then they'll be in a better place to go through lockdown, through sort of all of the bonkers things that have been introduced to the hospitality sector. So we've got a big responsibility, I think.
And of course, they can purchase a better piece of equipment if they're paying it over a longer term, which, in the long run will also help.
Yeah, I think it's an important point in terms of the life cycle cost of the equipment, and to buy the piece of equipment you actually need rather than just the one you can afford is a key. And I know certainly from an FEA perspective, we're very supportive of that, and certainly from the entry point of looking to the points that more sophisticated equipment will tend to be more expensive, but that's because of the benefits that accrue from that. So if that increased cost can be amortized across 3 years or whatever period it is, it means that the operator is able to be more efficient as a result. Good. Okay. I'll throw open to anybody to ask a question from the audience. Any points that somebody would like to ask, please just unmute yourself and unclick your video button, and we'll we've got an open opportunity to get any of your questions answered. If not, we'll pull the meeting to a close, I think. No? Okay, everybody's happy. Okay, so let's just wrap up then, if I may, from each of our speakers as a final element in terms of anything you'd like to say to the audience in support of leasing, or what you would like to do to develop a conversation. Sharon, if I may, perhaps I could start with you.
Yeah, absolutely. We've been in this industry for a long time. So whether you're a manufacturer, distributor, or installer, it doesn't matter to us. We'll set up online systems for everybody, and we'll put pyramids in for you on the line. Ring us up. What we found is very helpful to people is this low start for people, and this seasonal, especially if you go around the coast, you know, and those particular restaurants around there, we find that very useful. So email me and I'll see whereabouts in the world you are, because we have regional salespeople who can come out if you'll accept them or not, and we'll go from there.
Lovely. Thank you very much, Sharon. Thank you for that. Richard and Matthew, anything you'd like to say to conclude?
Just similar to Sharon, really. We can come out and see you. More happy to sort of outlay all the products we can help you with. Low payments, open to anyone who wants to inquire about it. And yeah, just get in touch. You get any queries or questions, anything you need, just drop us an email and we'll more happy to help you out.
Okay.
Do you want to add anything, Matt?
That's it, really. You know, if you've got something quirky you're working on, you need it, just let us know and we'll be flexible around you.
Leasing option.
Thank you for that. Ian, across to you, please.
Yeah, similar. I'd like the opportunity to email my presentation, which didn't sort of work according to plan, but it is informative. It's sort of, it will give a little bit of insight of what we think we can do moving forward. Have a look at it. Again, similar to the other guys, we're nationwide. We'd love to come and see you sometime when we're allowed to, and really talk through the benefits, features, and how we can sort of grow together and sort of create a better awareness in the marketplace.
Thank you for that. And I think from an FEA perspective, what we should perhaps look to do is work with all three of you to produce a generic guide to financing equipment, because I think if we can provide that umbrella role to support the manufacturer, the distributor, and indeed the operator who's looking to acquire equipment, we can perhaps put some publicity out into the market through the main magazines to look at how the operator can address that issue. So Jocelyn, I'll ask her to pull that together for us, and what we'll do is, as I said at the start, we're delighted to circulate your presentations and your contact details, and it really only leaves me to say a thank you to everybody for being on the call this morning. Thank you to all of our speakers there, and we look forward to seeing you at the next webinar. Thanks everybody for joining.